Four things to know about local government finance. Number 1. Local government units craft their own spending plans. Decentralization was instituted through Republic Act 7160 or the Local Government Code of 1991. The code identified a number of devolved services such as solid waste disposal, public markets, primary health services, public parks, agricultural extension, water supply, drainage, and sewerage, among many others. Similar to the national budget cycle, the local budget is proposed by the local chief executive, debated and approved by the local sanggunian, and implemented by the local chief executive. LGUs are free to craft their own spending plans. The only restriction set by the local government code is that personal services of an LGU should not exceed 45 to 55% of their annual budget, depending on LGU category, and that 20% of their internal revenue allotment, which we will discuss later, should be spent on development projects. In 2018, overall spending of provinces, cities, and municipalities reached 506 billion pesos. Cities topped the level of spending at 203 billion, municipalities was second at 188 billion, and provinces last at 114 billion. Top spending priorities were general public services, purchase or construction of property, plant, and equipment, economic services, and health and nutrition. Given the diversity of the LGUs, there is also a big disparity in spending levels among them. In 2018, Bulacan is the highest spending province at 3.8 billion, while Batanes is the lowest spending at 289 million. Quezon City is the highest spending city at 21 billion, while Canlaon City is the lowest spending at 246 million. Taytay Rizal is the highest spending municipality at 1 billion, while Mahatao Batanes is the lowest spending at 26 million. Of course, population size plays a major role in these disparities. If one were to compute expenditure per capita, the rankings would probably be very different. Number 2. Local government units collect their own taxes. With the devolution of responsibilities, the local government code also saw it fit to devolve certain taxes to LGUs. Major local taxes are the real property tax, business tax, professional tax, and amusement tax. Similar to the national government, the power to tax is exercised by the local sanggunian through an appropriate ordinance. Aside from taxes, LGUs also get revenues from permits and licenses, as well as service fees and LGU-owned businesses. In 2018, revenues from local sources totaled 226 billion. 40% came from business taxes, 28% from real property taxes, and 10% from LGU-operated enterprises. Most observers believe that LGUs have not yet maximized the potential of their local taxation powers due to deficiencies in technical capacity as well as lack of political will, especially when it comes to implementing real property taxes. Similar to expenditures, LGU revenue collection also varies greatly. In 2018, among provinces, Rizal collected the highest revenues at 1.6 billion, while Tawi-Tawi is the lowest at 2 million. Among cities, Quezon City is the highest at 16.6 billion, while Marawi City is the lowest at 6 million. Among municipalities, Limay Bataan is highest at 1 billion, while Lumbayanage, Lanao del Sur is lowest at 30,000. Number 3. Local government units get a share of national taxes. Aside from local sources, LGUs also get an automatic share of 40% from national tax collections called the Internal Revenue Allotment. Some laws also grant particular LGUs additional shares on top of the IRA, such as shares from ecozones, mining, PAGCOR, PCSO, and tobacco excise tax. In 2018, revenues from external sources totaled 450 billion, 93% were from the internal revenue allotment. This is almost twice the total collection from local sources. ERA is distributed as follows: 23% for provinces, 23% for cities, 34% for municipalities, and 20% for barangays. The allocation formula is such that population gets 50%, land area 25%, and equal sharing 25%. Distribution of other shares in national revenues are described in different laws. In 2018, highest recipients of shares in national revenues were Ilocos Sur at 4.6 billion, Quezon City at 5.2 billion, and Caluya Antique at 913 million. Lowest recipients are Batanes at 406 million, Palayan City at 344 million, and Mogpog Marinduque at 25 million. For many, the high dependence of most LGUs on their ERA and shares from national revenues is a wasted opportunity given the devolution of some taxation powers to LGUs. More than 56 provinces, 52 cities, and 1,178 municipalities depend on their share of national government revenues for more than 80% of their income. Recently, the Supreme Court ruled in favor of several cases filed against the national government, agreeing with the petitioners that the formula used in computing LGU share in national government revenues was incorrect. According to the ruling, one of the major errors was the exclusion of internal revenue collections of the Bureau of Customs. The implication of this ruling is that in 2022, LGU ERA is expected to increase by 260 billion. How the national government will fund this is uncertain, considering the sum is even higher than the budgets of several national government agencies. Number 4. Local government units can also incur debt. The authority of the LGU to incur loans or issue bonds should be exercised through a Sangguniang resolution authorizing the local chief executive to negotiate and enter into contract for securing a loan or setting the terms and conditions of the bonds. The local government code allows LGUs to borrow as long as debt servicing does not exceed 20% of regular income. LGUs are way below that ceiling, averaging only 3% of regular income. In fact, LGUs have been very conservative and have consistently ended with savings at the end of the year. Year-end cash balance of LGUs in 2018 was 465 billion. These are the 4 things to know about local government finance.